Today is Thursday, February 24th, and late last night, the news got around that Russia was beginning an invasion into Ukraine. There was a lot of calls for war. Is there going to be war? At night, the futures stock market down massively, and today, much of the stock market down a lot of fears. Now, there's pretty much only a couple things that are up. One of those is oil, and the other of those is uranium stocks, which are up massive today. And today we're going to be talking about why are uranium stocks up so big today with all of this crazy news happening, war, Russia, Ukraine, what's going to happen next, and what's going beyond the scenes in the uranium market and how this influences uranium. We're talking to my good friend Justin from Uranium Insider. Want to let everyone know that Uranium Insider just released a much more affordable quarterly membership option. I know there's a lot of people that were saying, they couldn't afford it. I am a paying member myself, and I can say that it is highly worth the financial investment, and has served me and my mother-in-law's portfolio exceptionally well. But great news, they just announced a more affordable quarterly membership option that just dropped. So I highly recommend you check out Uranium Insider, check out the new quarterly option. It's right there down below, pinned to the comments and in the description right there down below. And give us a comment right there down below that says "Go Uranium, go." And if you enjoyed today's episode, make sure you smash the like button on this video. Shout out to our sponsor, Vizsla Silver. Vizsla Silver is one of our favorite silver and gold mining stocks. We want to thank Vizsla Silver for being our sponsor. And Justin, good to see you.
Always good to see you, Jake. How you doing?
I am doing good. I've got a full day of interviews today, and I was just on another interview, and I started that other interview, and I said, well, everything is down today except for oil and uranium stocks. And then once the interview ended, I got a text message from you, and you said there's a lot of, really interesting things happening, and what's taking place right now could have big repercussions and ramifications for uranium. And so I said, well, do you want to hop on real quick right now? So that leads us here today. I know you got your new, more affordable quarterly membership option and all that type of stuff, but let's talk specifically, why are uranium stocks up while everyone's freaking out, and they're up huge? And what does uranium and uranium stocks have to do with Ukraine-Russia war?
Good question. Well, I think that first of all, should probably just kind of give some color on the setup leading into today. So really, without going into the long and somewhat boring fundamental setup for the entire sector, which we've covered ad nauseum in previous interviews, just going to talk about the previous, let's say, 6 to 8 weeks. Uranium has been pretty weak since the highs in November, but the price of uranium has been relatively stable. It hasn't moved down that much since the highs. It's up over $1 today. But we're still hovering around that low to mid 40s range, and it's been very stable throughout the sell-off. The other interesting thing that I know I mentioned in our previous interview, but it's worth repeating because this was yet another tell in addition to the tell that we're seeing today and how the market is reacting to what's going on in Ukraine. That tell was that during the sell-off, they started in November and went through pretty much until a couple of weeks back where we bottomed in late January. The outstanding shares of the ETFs increased. So we're actually now at an all-time high in the outstanding shares for both URA and URNM when you combine them. And the reasoning for that, in our opinion, is because there's been positioning by smart money into the ETFs. There are flows going into the ETFs during this sell-off period. So that really intrigued us. And we kind of perked up when we sort of realized what was going on. That was kind of early January. It's like, wait a second. During all of this bloody selling, when most of the equities in the space were down between 40, some of them up to 50% since November, which is a very significant sell-off. I mean, it's not insignificant, or it's not unusual, I should say, in terms of a resource bull market to see 30 to 50% sell-offs, once, maybe even twice a year during the bull market. That is going to continue to happen. But what was interesting was to see the inflows into the ETFs during this period. So we were like, all right, that's interesting. Then, that gave us some more confidence to not only remain long, which of course we did, but also to add to our positions and be a little bit more aggressive, knowing that there was other non-retail entities positioning in these ETFs during the sell-off. Okay, so that leads us up into this past week where we started to see a bit of a decoupling in terms of the performance of the uranium sector relative to the performance of the broad markets, and let's say the S&P specifically. And if you want, I can share my screen really quick to kind of show you what we've been seeing and what we're seeing today. All right, so you see that okay? So this is a chart of Cameco relative to the S&P, and you can see that gigantic green candle today. The S&P is down almost 1.5% today. In fact, it opened up, gap down, sold off in the first hour or so of trading. It was down, I think, close to 3% on the day, which was a really big down move for such a huge index. However, it has been trading up, but S&P is still down about 1.5% today. Cameco is up about 8 or 9% on the day. And so you can see the relative performance of Cameco versus the S&P. And this is the daily chart. You can see the moving averages are just squashed together here. Now they're all pointing up. And this is, in our opinion, the beginning of yet another strong move for the sector, especially when you compare it to the underperformance of the broad indices. Now, considering that, let's zoom out to the weekly chart for this, and we'll see exactly where we are and where we could be going. Okay, this is Cameco compared to the S&P. All right, just absolutely the very, very beginning of this rally is what we're seeing here. And you can see the outperformance in during the uranium bull market, which was about 2004 to 2007. Now, during that period, the S&P was actually up. It wasn't a huge rally for the S&P, but those few years were bullish for the S&P. And you can see the vast outperformance of Cameco and therefore the whole uranium sector relative to the broad market. So now we're in the very early innings of this, especially considering that big pullback we just had. The valuations are back down to very attractive levels as our mutual friend, Mr. Rick Rule, is frothing at the mouth right now, considering that he got a 50% discount on the sector that he's extremely bullish in. So I just wanted to share that with your viewers. I think that the decoupling from the broad market is something worth noting. This is something that a lot of commodities investors have been speculating on eventually happening at some point. Would be a shift of investment capital moving from growth into value. And that seems to be happening. And we're actually seeing it not in theory, but in the real world here, especially with uranium. So today what's happening is, as you mentioned, overnight, there's reports of Russia actually invading Ukraine. Now, over the weekend, there was a joint resolution signed by the leaders of the separatist areas of eastern Ukraine and Vladimir Putin, basically acknowledging between the two entities that, okay, these are independent states now, which is effectively Putin just saying, okay, these are now mine. And that happened over the weekend. The news followed the day after, saying that Russia was moving peacekeeping troops into these separatist regions. And then last night, there just seems to be an all-out invasion of Ukraine by Russia, throughout other areas of the country, not just these separatist areas in eastern Ukraine that he was initially saying he wanted to regain control of. So what does all this have to do with uranium? This sort of started with Cameco's conference call when they stated, and this was about 2 weeks ago, where they stated that they had signed 40 million pounds of uranium into long-term contracts in the first 5 weeks of the year. So some of that we believe is a general resumption of long-term contracting in meaningful volumes. And some of that is taking some risk for the utilities off the table in terms of contracting with Kazatomprom or Russian-controlled eastern sources of uranium and moving that risk to the west into Cameco. So some of that is probably utilities that needed to contract, potentially already on the table, and finally pulled the trigger considering the unrest that we saw in Kazakhstan last month. Now that seemed to be quelled relatively quickly and the market sold back off. But when Cameco announced that they signed 40 million pounds into contracts in the first 5 weeks, the market recognized, okay, this is actually happening. So that is just taken up to an exponential level currently with Russia invading Ukraine. Why? Russia is a major player in the uranium space. Rosatom is a major player in the enrichment space. Russia controls over 40% of global enrichment of uranium. 40%. Okay. Russia supplies about 15% of the uranium to the United States. Russia has still a decent amount of control over Kazakhstan. Now, you might not read that on paper, but it's generally understood. Their influence is still substantial, especially considering that Russia is the one that stepped in to quell the unrest last month that happened in Kazakhstan. So you generally have this very risky situation. We could see sanctions on Rosatom and other Russian-owned entities that are influencing the uranium space. That's a possibility. We could see and are likely to see too much risk in that area for capital to be willing to be put on for the utilities to source uranium from that region. Okay. We could actually see, if things escalate, Russia actually cut off what are considered critical minerals and critical supplies for their enemies in this situation. And of course, we hope that this does not escalate into all-out kinetic war involving more than who's already involved currently. But those risks are there, and the market is understanding those risks and pricing them in. And that's why we're seeing big moves in uranium, spot price moving up, big volumes in most of the equities, big volumes into SPUT, big volumes into Cameco. And it's just, I hate to pound the table again, but it's the security of supply. Security of supply is essential for nuclear utilities. And when a major player in the uranium space has new unexpected risk being put on currently, then utilities take notice and act, justly.
Yeah. So I woke up to use the restroom. I don't know, maybe it was about 12:30 or 1, and I couldn't sleep, so I checked the news, and I saw the Russia invasion, and I thought, oh man, this isn't, I've got, you and I were just talking about, I've got another baby on the way, and you think about the fourth turning, and you just think about the incredible instability of the entire socio-economic and political landscape globally. And I was immediately like, oh man, this is not good. And then, then I saw how down stock futures are. And, I obviously I know portfolios will rebound. So whatever. But I was concerned about, of course, we don't need another war. And then I looked at early trading and I saw how down everything was. And I've got a busy day back to back on interviews. And you sent me a text and you're like, holy cow, look how much the sector's up. So I went and looked and I was like, oh, wow, like all my stocks are up like 10% today. And so I thought that was, really interesting, and you kind of touched a bit upon it, but let's go a little bit more into it. I mean, nobody wants a war, but the weird thing that seems to happen during all these commodity markets is how the bull markets always happen during very unstable times, during very weird times, whether it's crazy inflation, whether it's wars or whatever it is. And then all of a sudden you see everything down and uranium stocks just like going through the roof. So let's talk a little bit more. Obviously the people that are buying uranium today, it's obviously smart money, and maybe more specifically, it's big money. But let's talk a little bit more about what is smart money and big money seeing. I know you touched on it a little bit, but what is smart money? What is big money seeing? And why is this so important for someone listening to be aware of?
Sure. So I'll put this particular event into some context of the type of events that markets can experience. Okay, so this is essentially what you would consider an exogenous event. This is something that the markets were not expecting even a month ago. This is something that is not priced in, and it's something that came, quote unquote, from the outside. Right? This is an event that was absolutely unexpected for the markets in general and the uranium market in particular, because that's what we're talking about here, right? So basically, unexpected events like this can lead to sudden shifts in previous mindsets. So the previous mindset, let's say 2 months ago, was that um, Russia and Russia controlled sources of uranium have been unbelievably consistent and reliable for the last 15 years. Okay. It's been the reliable source of cheap uranium, abundant uranium for 15 plus years. Okay. I spoke with a fuel buyer last year, and we were talking about, just Kazakhstan in general and Russian supply. And his response was like, I love buying from the Russians. This is a US utility fuel buyer. Good guy. I love buying from the Russians. You go to them, it's a one-stop shop. You buy your U308, you buy your UF6, you buy your EUP, you can buy your fabricated fuel, done. Call them up, they're happy to work with you. You pay a good price and it's done. It's the one-stop shop. So this type of event, this exogenous event, essentially can be a mindset shifting event, not only for the markets, because the markets seem to be understanding the implications for uranium, the potential implications for uranium, but the markets are also understanding that this is a mindset shifting event for the players within the uranium space, especially the utilities in the West, European utilities. Europeans are not happy with what's going on right now with Russia invading Ukraine. Okay. They did not expect a full on kinetic invasion of the country as such. It's one thing for Putin to strong arm a couple of states in the east, in the eastern part of the country, probably for access to a warm water port, but to actually full on militarily invade the country, Europe is not pleased with this. Okay. And there's a lot of reactors and a lot of nuclear utilities in Europe. And so this type of exogenous event is essentially a wake up call for the utilities. And that's what the market is pricing in. So the utilities now have to consider, okay, if I'm operating a plant in Canada, in the States, in the UK, in France, et cetera, where am I looking to source my supply for the later part of the decade into the 2030s? Can I take on the risk? Can I even source the capital to put on that risk to buy pounds from Kazakhstan right now, to buy EUP from Russia? Is that even possible? And that's going to be increasingly risky in this environment. And so that's what the market is pricing in, is this type of event. Now, the second part of this is to understand what the market is telling you. Okay. What's happening in the uranium market today is what's called a tell. All right. A tell in terms of market jargon is a very particular price action against an unusual backdrop. Okay. So when we saw uranium equities rallying very strongly this morning against a very weak tape on the S&P, that is a tell. And that means that something has changed. There's something different going on here. Okay. As we expect the resumption of the uranium bull market to recommence in the near term, the tell that we're seeing currently is very likely the start of that resumption. So the market is digesting this event and it's trying to put on the implications of this event. And clearly the way that the market is reacting, especially with the backdrop of such a weak broad market, this is a very, very strong tell for us.
So essentially, we've been talking for a long time about when will utilities come to the table? And someone like me, I'm looking at it and going, how stupid are these guys? I mean, you've got Sprott coming in soon. They all need to come back and get their uranium. We're in a supply demand deficit. What are these morons doing? And this, of many catalysts or of many components, let's just call it components to this. One of the components is that this might be a thing that makes them show up at the table quickly because of concern of not being able to get it now. Whereas before, they were saying, wow, this is could get a little crazy, but let's wait and see. Now they're saying, or it looks like they're starting to say, we need to get to the table. Is that kind of what's happening?
Yeah, to some extent. I mean, and in their defense, the fuel buyers that I've spoken with, which have been primarily in the States, are very, very intelligent people. One of them, to your point, did tell me that he had to explain to his manager what the fuel cycle was, which I thought was really interesting. But the fuel buyers that I've spoken with, generally speaking, do a decent amount of risk aversion. So they'll actually source their U3O8 from a couple of different companies in a couple of different jurisdictions. They'll source their UF6 from a different place, their EUP from a different place. They'll try to spread that risk out, generally speaking. But it's important to note that, while utilities have gotten a lot of flack over the years for not, just stepping up to the plate and buying uranium from some of these, Western companies that have mines on care and maintenance, specifically Cameco, for example, you have to also understand that they're not really allowed to, by their management and by their own budgeting, to go ahead and voluntarily overpay for uranium just because there's a company that needs higher prices with a big mine on care and maintenance, and that mine coming online in a reasonable time frame could affect their security in the future. If they can go out, let's say a year and a half ago and buy midterm pounds from Kazatomprom for $30, they're going to get a slap on the wrist if they show up to Cameco and pay 45. Okay, so that's why it didn't happen. It wasn't because the utilities were like, screw you guys, we're going here because it's cheap. It's kind of like, well, they can't just go out and voluntarily overpay just because a company is experiencing pain from having $10 million a month with a mine on care and maintenance. And so, but that exact situation is what's forced us into this situation, where it takes an event like this. It takes the prices coming up closer to that marginal cost of production. Now, we still have a ways to go to get to the true marginal cost of production, but closer to the cost of production for a company like Cameco before this situation even comes to fruition. Now we have an event. What other event was similar to this in the previous bull market? 2006, Cigar Lake flooded. That was a major source of supply from a new mine that was expected to come online. It just started coming online in 2005. So that was a big, big event. And that was a risk to supply going forward. That triggered some big moves in the spot price. Could we see that now? We could. It's entirely possible. Could this pass and Russia pulls back and the situation dissipates and normalizes over the next month or two? Yes, of course, that's always possible. But as of now, what we're seeing is a major reliable source of uranium now has risk that it did not have even yesterday. And it certainly didn't have a month ago. And so we're seeing the market react to that.
Now, when we talk about the risk, I know you touched on it. So is the risk twofold? Is the risk that, one, that there's sanctions, and two, that Putin says, well, I'm going to hold on to it just in case we, go to a nuclear war or just to starve out enemies? I mean, what are the risks? Or I guess you can't really call it a black swan because we're predicting it, but if we use that term, what are they really?
Sure. I think the risks in terms of supply coming from Russia or Russia-controlled areas would first be the potential for sanctions, specifically against Rosatom or 10X or any of the Russian-controlled uranium-related companies that control EUP, that control U3O8, et cetera. So that would be a significant situation if they were actually sanctioned. The second would be, like I mentioned, capital risks. It's entirely possible that there's financial sanctions. In fact, that seems like that's already happening. Financial sanctions coming from the EU against Russia. So it's possible that we could see capital not having the willingness to lend for the purpose of sourcing material from Russia or Russian-controlled states. That's probably the most likely. I would say sanctions may be the next most likely, and then the third would be if this escalates into a full-on kinetic war situation involving the West, involving NATO, let's say, including the US, then yes, I guess it's possible that Russia could actually cut off these materials. from their, from their enemies in this situation. And that, I'm hoping that this doesn't escalate to that point. Of course, there's bigger implications than just our investments with this whole situation, but those are all entirely possible. And yeah, so that's kind of what the market is attempting to price in, and clearly is reacting to on with the price action of today in the uranium space.
Understood. So, guys, we got Uranium Insiders got a new, very affordable quarterly membership. I know there's a lot of people saying they really want to join, just couldn't afford it. So be sure to check that out in the comments, pinned to the comments and in the description. Now, I couldn't sleep after I saw that. I've been up since like 1 a.m. And I was one of the things I was thinking about was, it's such a bizarre situation from a geopolitical perspective because so much of the world is reliant on Russian energy. And so it's this really weird situation. And of course, Biden shut down some of the pipelines in the United States, which causes, more of a reliance on foreign energy. And it makes me circle back. And this was before uranium stocks started blowing up, which I was just checking, which is crazy to see. I mean, Cameco up 9%. That's like Barrick Gold being up 9%. But needless to say, it made me just think about nuclear. And this was before any of these stocks were taken off, and before I had, thought about what you were saying to me here in this conversation, in that whether it's United States or whomever it is, but as an American, it just shows how important it is to not only have energy independence, but it shows why nuclear is so important across the board. I mean, we already are having a massive energy crisis in Europe, and they're going to get it way worse than the United States. And if this continues, it's going to get very bad, especially in Europe. But it goes back to the importance of nuclear as a reliable source of energy. What are your thoughts on that?
Oh yeah, absolutely. I mean, we've been writing for the past year on the nuclear renaissance that we're experiencing on a global level currently. Nuclear has worked out extremely well for the countries that have embraced it. France is a great example, because the bordering countries, especially Germany, have reduced their nuclear and have taken on $500 billion investment into wind and solar, and have had to increase their coal, biomass, and natural gas electric output to make up for the intermittencies of renewables in light of shutting down most of their nuclear plants. France is the largest exporter of electricity on the planet, and they are 70% nuclear, and they are planning to build another 6 gigantic EPR2 1650 megawatt reactors by 2035, with the potential of adding 8 more to that, in addition to investments in SMR. So the nuclear renaissance is definitely upon us, right? And we've been writing about that forever. Well, the theme of our newsletter that'll come out for March, which is out next Wednesday, is going to be energy security, and the themes that are all based around that. And that's exactly what we're seeing here. And there's a lot of complex situations happening in terms of the US and Europe and Russia in terms of energy. The US is actually a net importer of oil currently, where we were a net exporter just a few years ago. We actually buy, I think it's more than 500,000 barrels of oil from Russia per day. Germany has the Nord Stream 2 pipeline coming from Russia that Biden supposedly just reneged on the certification of that pipeline, and Germany is in line with the US on this, saying, yeah, we're not going to certify this, which kind of shoots themselves in the foot, because Germany really, really needs that pipeline and that gas import from Russia or from somewhere, probably going to come from the States now. And that may have a lot to do with this conflict from in the beginning, having to do with geopolitical energy wars, essentially. So energy security is huge, and it's a huge theme for uranium, and it's going to continue going forward, in our opinion.
Yeah, it's crazy, when you think about, just the weird things, like you go into your grocery store and your blueberries are from New Zealand, right? That's like very weird. And you see how unsustainable it is. But when you think about how fragile the global political system is, coupled with how fragile the global financial system is, and then you think about how much energy comes from a quote unquote adversary, and you go, man, like this just isn't smart at all. So one, I hope that this, uh, I don't have a lot of faith in American politicians, but I hope that it causes, more of an investment in United States uranium production. But I guess if I pray to God we don't have I pray to God we don't have a war. It's not going to be good. Obviously, everyone is it's not 100 year ago war. Everyone's armed, a lot more significantly. But as you stated, it's an energy war. There's cyber war. There's so many more dynamics to it, and it wouldn't be good. If it is going to happen, then I at least hope to God that my uranium portfolio doubles in the process.
Yeah, I hear you. It's, most of these events we can't really control. The best we can do is try to make the best of them, and to take care of ourselves and our families and our communities. And that's obviously what we're all about too, with the newsletters, trying to help people make money in this difficult situation in terms of the markets right now. We've been pounding the table on the thesis the past few months as the market has sold off. And that late January bottom, we pretty much called it in our February letter.
I mean, dude, what the hell happens if this does occur and this is a front running movement, and one or numerous of the different avenues you proposed earlier, whether it's Russia withholding, whether it's an inability to transport, whether it's financial issues, coupled with a Sprott New York Times list and buying at the same time while utilities are frantically coming into the table? I mean, it could be a perfect storm.
I mean, the last time we spoke, the short to midterm thesis for us, and the long-term thesis, of course, is nuclear as a growth industry. Utilities are coming back to the table to sign long-term contracts at volumes far greater than the annual burn rate, which hasn't happened for about a decade. China's growth, 150 reactors in the next 13 years, et cetera, et cetera, et cetera. All of the basic tropes of the fundamental thesis. But a big part of that has been and will continue to be the financialization of the sector, which is primarily driven by Sprott at this point with the Sprott Physical Uranium Trust. But this whole event coming from left field could accelerate things. That's for sure. I mean, if we actually see, even if we don't see sanctions or uranium as a critical supply being cut off by Russia, even if we don't see that, we are likely to see an acceleration of term contracting by utilities. We could see more uranium being purchased on the spot market by traders and by utilities. Utilities have largely been out of the spot market for the most part, but they could come back if there are any utilities that are uncovered in the short term that need to cover. That's a possibility. But basically, long story short, if we do see an impact on Russian uranium in any form, we will see rising prices. And rising prices for uranium obviously leads to rising prices of the equities that are involved in the space. So this whole situation wasn't really baked into the cake even a couple of weeks ago. So this is something that's in addition to the financialization of the sector that we expect will happen. In fact, I would say that's the thing I'm most confident in terms of this sector, because it is so volatile. It is so difficult to wrap your head around, even when you study it every single day as we do. What I know more than anything is that when an entity such as Sprott is positioned in the way they are not going to let this opportunity pass them by. So it's a matter of time before Sprott goes through their Rolodex and is like, all right, yeah, now's the time. URNM and U.UN go. Okay. They're not going to just sit by and let that pass. So the thesis of this, in terms of timing, in my opinion, is that they're likely to not hit it hard until there's a resolution in one way or another for the NYSE listing. That's my opinion. I could be wrong on that. We're seeing big volumes in Sprott right now. That probably has more to do with the market than it does Sprott saying, hey, now's the time. I don't think they're doing that yet. I think that they're going to wait until whether or not they get the NYSE listing. I still believe they will, but they're going to wait until that application resolves itself somehow, and then that's going to be game on. What happens between now and then, this whole Russia-Ukraine situation is just came out of left field, and we're seeing how the market's reacting to that currently.
Well, for everyone listening, wherever you are in the world, let's all pray that we don't head into another war. Obviously, the world hasn't been totally without it, but the last 4 years, have been something to be grateful for, and we'll all pray for that. If Raytheon is going to be making a fortune, I would like to as well during the process, though. I guess would be my bumper sticker during this time. So for everyone listening, we've been beating on the drum, but this is definitely an opportunity you want to keep your eyes on. I highly recommend. Now we're coming to the end of this video. You go open up the tab, pinned to the comments or in the description. Check out what Uranium Insider's got to offer. I'm a paying member myself. It's been fantastic for me. I manage my mother-in-law's portfolio, and she's done quite well. And they got a brand new quarterly, very affordable option for everyone that hasn't been able to sign up. So I highly recommend that you check that out. Give us a comment down below for the good old YouTube algorithm. Smash the like button on this video, subscribe, and bell notification is what notifies you for new episodes. So make sure you hit the bell notification. Justin, any final words?
Yeah, I just wanted to share with your listeners that something that we do for members every month is we have a members only webinar. And this is a pretty big event for us on a monthly basis. So we have a really big turnout for our members, and we go deep into the sector, 2+ hours. This webinar typically is. We always have a special guest on the webinar. That's typicody a CEO of one of the companies that we own and follow.
You should bring Putin and Biden in on this next one.
Oh my gosh,
and then we can get the inside scoop, dude.
That would be something. So last week was our February webinar. And for anyone who's a new member, you can access all of our previous content. And that's right at the top when you're inside the members area. But last week's webinar was great. We went super deep into two things. One is exactly what we're seeing in terms of these ETFs and the ETF flows and the outstanding share count, which I mentioned, which is a big tell for us. And two, we've just put on a pretty large vertical bull call spread in the uranium space. This is an options trade that can be difficult for people who don't understand options, but we go deep into why we put on this trade and how to do it. And this is one that has, let's see, at this point, it's about a 3.5 to 1 reward to risk, where the underlying can go up, maybe less than 50%, and we can go 3.5x on our investment in less than a year. So this is the type of trade that we put on for members for Uranium Insider. We look for leverage without added risk, and that's one way that we do it. And of course, in terms of the companies that we own, we have a process, as you well know, for determining what we feel are the best options in the space. And we've done pretty well so far for our members. So if anybody's interested, like Jake mentioned with the link in the description, if you have any questions for me, you can find me at uraniuminsider.com. We'd be happy to fill you in on any questions you might have about our service. But yeah, last week's webinar was great. Next month is going to be just as exciting.
Yeah, you got to get Putin and Biden in, dude.
I'll do my best.
I could probably make some phone calls for you.
All right, please do.
All right, everyone. So let's all send our positive intentions out and pray for as peaceful as a resolution as humanly possible. Nonetheless, it seems like what happens during every commodities market is some crazy stuff happens, and then a few people end up making a bunch of money. And if all of this crazy stuff is going to happen, and it is totally outside of our control, the only thing we can control is obviously one, our health. Number two, the best of our ability, our peace of mind, our businesses, our relationships, friendships, our family, and our finances. And clearly, this is presenting a really compelling opportunity. Unfortunately, if there's a lot of fear, there's probably going to be a lot of people in mainstream stocks that may lose a lot. But there's an incredible opportunity for us to make a lot and protect our family and do something good with it. So I recommend you hit the link in the description, pinned to the comments, check it out, see their new quarterly offering that they got going on. Give us a comment right there down below. Well, we want to thank you for joining today, and we wanted to put this together on a quick notice um, to help make sense of what's happening. Make sense of it from just a geopolitical perspective, but of course, make sense of it from an investment perspective and the potential ramifications of it. So I think we did a good job of that. Let us know in the comments right there down below. I want to thank you for coming on today, Justin. And I will talk to you soon.
Cheers. Thanks for having me, Jake.